Market closes in the green but off highs amidst the ongoing Israel-Iran conflict. The Sensex falls 900 points from the day's high. Meanwhile, the Nifty hits levels above 25,300 intraday for the first time in 2025.
Crude drops overnight to revert to levels before the Israel-Iran war broke out. Fears over Strait of Hormuz being closed dissipating also helps cool prices. Crude sensitives react to fall in oil prices.
KPIT Tech points to a slower deal convergence, delays in project ramp-ups, uncertain demand trends, and adverse forex movements. In its mid-quarter updates, spooking the street, the stock corrects more than 5%. Hello and welcome to Markets Forward, your go-to show where we get you up to speed with regard to today's trading action and we set you up for tomorrow. I'm Nigel and with me is Manglam. Hey Manglam.
Hi Nigel, you know what a day it was. We started off with a near 300-point uptake and thereafter we quickly gave up those gains.
Well, that's right, and we have got you covered for the next 20 minutes or so. We'll get you all the big news, the key developments on Dalal Street as well, some top corporate voices and the events to track as well. First up, though, in terms of trading action, Manglam, it was a good start. We woke up to good news and no one wants a war, right? And there was clear signs of de-escalation. And that's why in the markets at the high point of the day, we were up more than 350 points. But as that intraday chart is telling you, it lost its way midway and we couldn't conquer the 25,250 odd mark on a closing basis. So a good trading session, but it could have actually been better if the end was better. In terms of the broader market action, though, there's still pretty much bullishness because the advanced decline ratio comes up for you on the screen. We had more than two stocks that were advancing for one stock that was declining. So that's telling you your portfolio as well will still be feeling quite good. Mid-cap index up 0.7%. Manglam, but otherwise plenty of action. Plenty
of action that took place. You know, the advanced decline tells you the story. But for me, the important part is in the expiry week, the high of today and the low of today will become an important barometer to watch out for. Because we saw buying at the lower levels today, 25,000 now becomes an important level of support for the frontline index. The high on the Nifty today, 25,318, is something that we'll watch out for. Because prior to that, the high was 25,222. We've made a higher high for 2025. Let's see whether this sustains or not. At higher levels, we saw a decline in the likes of Nifty, IT because of global worries once again. Reliance because of oil falling as well, and the stock had outperformed. Bharti Airtel, if Vodafone Idea sustains, then does Bharti's market share or strength get under question? Perhaps not, but then again, there is something that the street is taking note of from that stock. But the sector that stood out for me on the way down at a time when all the broader markets did well were all the defense stocks. Because, Garden Shipbuilders, BEML, Paras Defense, Hindustan Aeronautics, all of them had seen a big jump during wartime. Now the street is believing that there is truce, there is peace. Perhaps, there is time for them to take those profits that they had made in the last 10, 12 days. What happens from here on? One will be watching out for these stocks as the barometer of where the world is going from here.
Well, that's right. Let's first quickly take you through all what we have lined up for you on the show today. We start off with the top movers and shakers with Hormuz. He will shed light on all the top oil stocks, defense stocks, as well as the newsmakers. Also on the show, oil price slumped amid the ongoing Israel-Iran tensions, while KPIT Technologies made headlines in the tech space after releasing a weak FY26 business update. Last but not the least, we'll delve into the key market events to watch out for tomorrow's trading session.
All right, so what happens to the Strait of Hormuz is something that we will watch out for tomorrow. But until now, first, let's go straight to Hormuz, who joins in to tell us about the movers and shakers of today. Hormuz.
Carrying on with the buzzword of the day, that was oil, which of course passes through the Strait of Hormuz. The oil prices falling had an impact on both the upstream and the downstream names. More than the downstream names reacting positively to it, it was the upstream names reacting negatively to it was the bigger reaction. Oil India down 5.5%, ONGC down 3%, negative reaction coming in for Chennai Petro as well. Some of the other newsmakers beyond the oil names were, of course, Bajaj Consumer management change right at the top, a 20% move. Enviro Infra of the order win, Aztec for the rights issue. Rice stocks saw a rebound today led by LT Foods, and of course, as you just mentioned, KPIT Tech in that week update, a 6% cut on that stock as well. And you mentioned defense as well. It's almost a law of gravity, right? What goes up comes down, and that's what happened with these names. Cuts of anywhere between 5 to 9% across the board, and not just select names. Almost every defense stock fell in today's session. What didn't fall though were stocks that ended at a 52-week high in today's trading session, despite this choppy market that we had towards the close of trade. India Glycols was at a 52-week high, as was L&T Finance. Another high for Poonawalla FinCorp as well, so that continues to move from strength to strength. And lastly, some of the other movers in today's trading session were the ones that did well on the volumes front. It's Swan Energy. JM Financial was the top gainer in the broader markets today. Titagad, out of the F&O band, did well today on very strong volumes. Back to you guys.
Okay, all right. Thanks a lot, Hormuz, for joining in, staying open, and giving us that update. Well, let's go across to our guests, Jai Bala of CashTheChaos.com and Sudip Bandyopadhyay, Group Chairman at Inditrade Capital. Hi, gentlemen. Thanks a lot for joining in. Jai, first, quickly, let's get the levels out of the way. A good start to trade, but as we said, we couldn't, breach the upper levels. Tell us the resistance, and since you're positive on the index, tell us where would you nullify that? What's the support level you're looking at? Next 12 months, where are we headed?
Yeah, the Nifty's resistance has come exactly at today's high. I projected this last week to 25,300, 23,600 was the level. Today's high was about 25,350 and change. So not surprising that the market turned from there, but surprising that it turned so much. But the supports, as long as Nifty can maintain 24,750, which I think it will do very comfortably, we are headed for 52-week highs, possibly by end of July. And from a 6 to 12 months perspective, I'm anticipating 29,000 for the Nifty. So I think the Friday the 13th low that we saw in June, I think that's going to hold. And I don't think the markets are at risk of breaking that.
All right, you're more optimistic on the market, but Sudip, I'll come to you with all the oil-related plays out here. But before that, let's talk about the oil prices, which have seen a correction following the announcement of the ceasefire agreement between Iran and Israel. Manisha joins in with the details first. Manisha.
Well, thank you for that. I'll start with the price action first, where we saw 7% of a decline in the overnight market. And then Asia, Europe today also saw yet another 3 to 4% of a crack coming in for the prices. So with this now, we are down by 14% from yesterday's highs. And also we are trading right at 2-week lows at the level where we were before the Israel-Iran conflict started there. I want to take you through 5 pointers on what has really led to a decline for crude prices. One, it clearly has been the U.S. president announcing a ceasefire between Israel and Iran, while we still see those statements coming in on perhaps a violation here and there. But the point being that a lot has been said, and we have seen prices go in for that correction there. The second is about Iran's retaliatory strike on Qatar's U.S. airbase. But we do understand that there were no casualties and the damage was minimal. So the market's really not counting that in. The third point is that the most critical Strait of Hormuz as of now will not be closed. That clearly was an extreme action that the street was looking at. With that also out of the way, at least for now, we're looking that also coming off in sense of premium in prices. The fourth point is about OPEC and allies, which have yet again reiterated that they are looking to increase production all the way until the month of November. And within all of this conflict, there comes my fifth point, and this one comes in from IEA, which said that they're holding 1.2 billion barrels of crude as an emergency fund and can deploy it into the markets if need be. So all of this really assured the market and is the reason you've seen that premium come off from the crude prices.
Thanks a lot for that, Manisha. Well, on the back of this decline that Manisha is talking about in crude oil prices, there were a lot of stocks that were moving around. Sudarshan joins us to help us out with that list. Sud?
So we don't know if there is a ceasefire, no ceasefire between Israel or Iran, but one thing is for sure, there was a big fall in the crude from yesterday's high of $81 per barrel. There's a fall of almost $12 per barrel, and now Brent crude is trading below $70 per barrel. Now it has an impact, positive as well as negative, on some of the companies. So first, talking about the negative impact, it impacts negatively to upstream oil companies, or say crude producers like ONGC and Oil India. For example, if there is a fall of $1 per barrel in crude, it impacts annual revenue in the range of rupees 300 to 400 crore for these companies. Now, talking about oil marketing companies or say downstream oil companies like IOC, BPCL and HPCL, if there is a fall of $1 per barrel, it has a positive impact in the range of rupees 200 to 300 crore to the annual EBITDA of these companies. Now, apart from oil companies, there is a positive impact on some of the companies for which crude is an input cost. For example, paint companies, up to 50% of their input costs are linked to crude. So if there is a fall in crude, raw material costs come down and it has a positive impact on their margins. Last is airline companies. For them, input cost is majorly aviation turbine fuel. Now, if there is a fall in crude, aviation turbine fuel costs come down and it has a positive impact on the earnings of airline companies. So that's the reason there was a divergent move in stocks today. While ONGC and Oil India were lower, all these paint companies, airline companies and OMCs were trading higher.
Take that point, Sudarshan. We don't know whether the ceasefire is for sure concrete and is this permanent for now or not. But what we know is crude prices are lower. But whether it flares up again or not, whether crude prices increase higher from here on or not, could there still be a play in these related plays? Let's go across to Sudip Bandyopadhyay for the same. Sudip, both upstream and downstream companies, along with some of these crude users, the end usage of the industry, at least in the paint space, is currently questioned because demand isn't growing as strong and then there is competition. But for someone like, Interglobe Aviation, where the tailwinds are so big, irrespective of crude prices, people are going to fly. That explains why that stock continues to be well bid. So in light of that, how would you view crude users and some of these upstream companies?
As far as upstream companies are concerned, I think one needs to be a little careful because obviously, the oil prices coming down isn't good news for them, and there will be pressure on their revenue, as was being explained by Sudarshan just now. So I think I'll stay away from the upstream companies. Of course, oil marketing companies do benefit when the prices come down. And, beyond the war, I think what the OPEC has been doing and has been trying to do is to increase supply. And they're talking about keeping the increased level of supply in place at least till November of the current financial year. I think that's very good news as far as oil prices are concerned. They are going to remain within a range and will not flare up, and that's definitely good news for oil marketing companies as well as the users of crude oil. As far as the ATF prices are concerned, obviously Indigo does benefit significantly as roughly around 50% of the cost of operation for the airline company goes to for ATF, and this definitely is excellent news for Indigo, where all the other factors, as you rightly pointed out, are in place for incremental demand and profitability in turn. So I think ATF prices remaining in a range and coming down is definitely good news for Interglobe Aviation. Paint companies, yes, I completely agree with you. Beyond the oil prices, there is intense competition, and that is going to remain there for the foreseeable future. Under the circumstances, I think there is pressure on pricing, and I won't, be a buyer in paint companies or recommend a buy. Not that they are not good companies, but the fact is, too many things are moving in that space at this stage.
Got it. Okay, all right. Well, let's focus on the next stock then. We have KPIT Tech that tumbled in trade after the company released its mid-quarter business update. They added that the business environment continues to remain uncertain due to geopolitical tensions. Vinny joins us to fill us in with what all the management has highlighted, and that's what spooked the street. Vinny.
Hi, absolutely. So business environment being weak and uncertain is a big issue. Then other than that, deal pipelines. It's a strong pipeline that they have, but the conversions is at a very slow pace. The ramp up in terms of wins, that is also progressing well, but that is also at a slower pace. Other than that, demand trends in Europe is the only region where they're seeing good trends. US and Asia, a bit uncertain on that front as well. There's uncertainty around tariff fronts. So these are issues which are impacting the overall performance of the company, is what KPIT is highlighting. Other than that, they are also saying that their other income is expected to be lower because during this quarter, we've seen a sharp fluctuation in terms of forex rates as well. Q1, they are expecting that, they'll not see any one-time gain this time like we saw in Q4 FY25. So obviously, in terms when you look at the profit, maybe we will see a reduction coming in on that that front. Now, obviously, on the back of this, Kotak Institutional Equities saying that, they've cut their FY26 to FY28 estimate by around 3 to 4% for their earnings. Even JP Morgan has cut the organic growth by 4% in FY26. And for FY26 to 28 estimate that they have of a CAGR growth, that also now they're expecting it to be lower at around 14.5% versus 16.5%, and they expect recovery coming in for KPIT Tech only from Q2 FY26 and onwards. So bit of that subdued performance is what one could watch out for in Q1 from the company.
Right, 6% lower on KPIT Tech. Jai, your thoughts on two things. One, crude. Where is the trajectory of crude, given the volatility that we are seeing? Is the chart telling you where it's likely to go? And second, on tech stocks as well. They have been underperforming. At some point, do they see support?
Yeah, let's take crude first. Crude had pointed out for a double bottom potential that for the both the varieties rally somewhere about 78 to 80, and that's done that. And I pointed out last week that crude is likely to drop from that and go back to retest the April lows it registered, and that's probably in motion now. We could see a short-term bump up to about 71 to 73, depending on which variety of crude you're looking at. But I think it's likely to go back to the April lows and revisit those levels. When it comes to tech stocks, I've been bullish on the markets, but very cautious on the tech names. KPIT had a great potential today. If it had closed above 1460, that would have triggered a massive buy signal for it. But it's still, it's not, despite its sharp fall of 6% today, I don't think it's got that much of damage, but it's a disappointment for the stock. When it comes to tech space, I'm more bullish on the mid-cap space rather than the small-cap space. But even there, I'm exercising a lot of caution. But if you have to be there, it has to be Tech Mahindra, Persistent, and Coforge. The rest of the names are just middling around. So I would rather be allocating much lower to the tech space for the moment. I'll wait for the sector leader TCS to close about 35.50 before I get aggressively bullish on the IT names.
Okay, all right. Well, let's focus on Vodafone Idea. Those shares, they rallied in trade as Communications Minister Jyoti Aditya Scindia spoke against a duopoly in the telecom space. Adds, it's not good enough to have two carriers and India needs more competition in every sector. Let's hear out that bite.
Today we have fiber, we have broadband, we have Wi-Fi, we have mobile, and soon enough, we will also have satellite. Our job is to provide as many avenues as possible, and within each vertical as well, provide intense competition. It's not good enough having a duopoly or one carrier or two carriers. You must have competition in every sector. India today is probably the only country in the world with 4 telcos.
All right, quickly, Sudip, your views on the telecom space. Do you think you stick with the leader, or you look at some ancillary plays like Bharti Hexacom or Indus Towers, or you take a punt on Vodafone Idea? Quickly.
No, not really going with Vodafone Idea. I think there have been too many uncertainties around it. Yes, today's statement by the minister is encouraging from Vodafone Idea point of view, but I think it's still too many uncertainties around it. So if I have to play, I'll continue with Bharti Airtel. Even Bharti Hexacom is okay, but I won't venture beyond that.
All right, gentlemen, thank you so much for joining in and giving us your perspective on the market, a whole host of sectors and stocks as well. With that, we'll take a short break, come back, get you top corporate voices along with key market events to watch out for on the other side. You're watching us here on Markets Forward, where we've told you a lot about stocks, a lot of individual sectors and the way the markets did today and how you have to prepare for tomorrow. Let's go across to the key corporate voices that we had on this channel today. First up, Narayana Health. The management feels Amazon's foray into diagnostics in partnership with Orange Health is actually a positive move because they believe this will offer tech-enabled solutions to customers and doesn't see Amazon as a threat to existing players like Narayana Health. In fact, they've also committed 400 crore rupees over the next few years, 4 years to be specific, to integrated healthcare business.
Well, next up is Kalpataru. The management was on CNBC TV18 earlier today on day one of their issue subscription. The management aims to trim its net debt from around 11,000 crore rupees to around 8,000 crore rupees. That's not all. It aims to deliver 1 crore square feet across FY26 and FY27. They added that they have around 50 million square feet of ongoing, upcoming and planned projects. While Hyderabad is a growing market, Kalpataru remains focused on MMR region.
All right, and we also had the management of Ellenbury Industrial Gases on CNBC TV18. This IPO too opened for subscription today. The management says portion of the IPO proceeds is being used to add more capacity. Since there is a major headroom available for new capacities, it's in fact eyeing to increase its total capacity to about 2,200 tons per day from 1,370 tons per day.
Well, time to wrap up. But before we do that, Upasana is standing by. She's going to give us the key events we need to track for tomorrow's session. Upasana, over to you.
Well, first up, let us look at the key global economic cues that we'll be closely looking out for tomorrow. First up, let's look at US markets. New home sales data for the month of May. Even crude oil inventories data will be out tomorrow. It is also important to know that the Fed meeting is scheduled for tomorrow to take up the proposal to ease up capital requirement for big banks. Now, let us look at the key stocks that will be in focus on the back of corporate action. Stocks like Canfin Homes, Seat, Signature Global, and even Valiant Organics will be in focus as board meeting for all these companies is scheduled on the back of fundraising. Even Union Bank will be in focus as board will consider capital raising plans for the bank for FY25 and FY26. Now, let us look at the key other events. Now, when it comes to IPO, mind you that HDB Financial Services and Sambhav Steel Tubes IPO opens for subscription tomorrow. Now, coming to the important AGMs, tomorrow marks as the 36th AGM of Tata Elxsi. We'll be watching out for that as well. And even NVIDIA annual meet is scheduled for tomorrow. And lastly, launch of Axiom 4 mission is scheduled to be held tomorrow. So all in all, looks like quite an eventful day tomorrow.
An eventful day indeed. Thanks a lot for that, Upasana. And you trust CNBC TV18 to get you up to speed with all those events that take place tomorrow. With that, we wrap up on this edition of Markets Forward. Stay tuned. We'll be back with more news and updates.